Hi there, welcome to Kneppy Invest and welcome to the second last day of July. July 30 has about 1 hour and 20 minutes left of trading. As I am recording this, time is 2:48 p.m. and we do see a sea of red when it comes to the indices. However, always look at the bright side of life or the positives. At one point in the morning, the ASX 200 was down by more than 1%. So we have seen a little bit of a rally during the rest of trading. So it could have been worse. And that's probably the way to look at today, unless you're really heavily invested in resources or really heavily invested in Fortescue. We'll talk about that in a second. So resources down 1.80%. So I'm a little bit surprised there, however, in saying all that, that we are down because the American markets were flat. The Nasdaq was up a little bit, about 0.19% or something like that. The Dow Jones Industrial was down 0.12%, but nothing much there. Now, there was a little bit of selling, I think, towards the end of the day because at one point the Nasdaq was up 0.7%. So what we've done today is a little bit opposite to what the American markets. They saw a sell-off in the last bit of the day. We are seeing a little bit of a rally. Not a massive rally, but it is much better than it could have been. So always look at the bright side of life. So what is the agenda for today's video? We'll go through the best and worst sectors, indices, and companies, and then we'll have a look at the top 5 stocks of the day. And unfortunately, I did have to exclude quite a few companies that had a pretty good day or a bad day, particularly when it comes to Appendix 4Cs and 5Es, because we are in the second last day of July. We are seeing a plethora of call reports being released, and I had to pick and choose which companies to include in the top 5 stocks. And in fact, 2 companies who released Appendix 4Cs, actually 3, released Appendix 4Cs, made it into the top 5 stocks. And coming in number 1 had to be, and probably the story of today, is Appen. The return of Appen? Question mark. Share price of that company last time I looked was up about 45% on the back of that company releasing their Appendix 4C. In fact, their very first Appendix 4C. So it seems like the ASX requested Appen to release a quarterly results or quarterly cash flow statement, and the market liked it a lot. So we'll have a look at that company. In fact, top stock of the day. That's a no-brainer. The other 4 companies, and ard. I use my discretion of being a shareholder of one of these companies to put it in the top 5. But the other 3 I don't own. But one of the companies has been a bit of a market darling the last month, and the share price was down 10% on the release of their Appendix 4C. Another company's share price is down 10%. Fortescue on the back of a pretty significant block trade. Credit Corp released their financial results, and the share price of that company has been, I wouldn't say seesawing, but on open, the share price dropped about 5%. And last time I looked, Credit Corp share price was up about 13%. So a bit of a seesaw day for Credit Corp. And the other company is a company that I do own, and I think is, or has the argument to be argued, is really, really cheap. And I'll discuss why. Now, some of the other companies that have not made it into the top 5 stocks of the day, particularly those companies that have released Appendix 4Cs or 5Bs, I'll go through these companies fairly quickly. There is quite a few. So I don't think I have much time to look at charts or answer any of your comments. So let's get stuck into the ASX today. And no Twitter, no X. In fact, I haven't looked at X or Twitter at all today. Been a little bit busy. I did a night shift. And usually when I do the second of 2 night shifts in a row, after that second night shift, I do stuff. I go for walks, go to the supermarket, and of course, because today is the second last day of July, a lot of announcements to pour through. So let's get stuck into the ASX today. Let's have a look at the best and worst performing indices and sectors. So 2 sectors are up. Discretionary, which is, I suppose, defensive. No, it's not. Staples is defensive. Discretionary is like retail. So for some reason, retail, like non-discretionary retail, what's that called? Discretionary. Oh, my mind is just a jumble of stupidity right now. So discretionary's had a good day. So retail companies, that sort of thing. And financials have had a good day, up 0.12%. And quite a few of the other indices or sectors not down by all that much, but 3 sectors down big: IT, energy, and materials. Bad day to be heavily invested in mining companies today. So we're talking about Santos, Woodside. Well, Fortescue, we already know, is down a lot today. BHP is probably down. Rio Tinto is down. So quite a few companies in the ASX 20 are down big. So let's transition to the indices. ASX 20 is down 0.5%. I actually thought that might be down a little bit more because of the large amount of energy and materials in that particular index. So a few companies in there might have done fairly well. So in gold is down 1.14%. So and notice the banks are up. So I would assume a few of the banks are up. Probably all 4 banks are up, and that has lifted the market, countering the bad day for mining companies. So I fully expect, as we have a look at the ASX 20, that BHP, Rio Tinto, Woodside, Santos, Fortescue, any other mining company that I can't think of right now are down, while the banks are up. See if I'm right. So I'm going to say seven companies up, 13 down. Oh, yes, let's celebrate. I should call it a day. And, well, I'm wrong straight away. ANZ Group's down. Well, I fully expected. Why is that down by so much? So let's have a look. So fully expected Fortescue down. WiseTech, yeah, IT's had a bad day. Woodside, ANZ, for some reason, just there. Then BHP, Santos, Rio Tinto, exactly what you would expect. And then REA Group, yeah. I actually expected Woolworths maybe to have a better day than down 0.35%. Let's have a look at who's had a good day. CBA. Where's Westpac and NAB? Down there. So relatively flat. So money's still pouring in CBA and maybe coming out of ANZ. Don't know why. CBA has one of the most ridiculous PE ratios we ever see for that particular company. I suppose the price to book is probably at a record high as well. There is no way I would even think about buying shares in Commonwealth Bank right now. There's just too much risk in that company at these current valuations. Valuation matters. And other companies done well today. Wesfarmers, Aristocrat, Telstra, which makes sense, QBE Assurance, and Westpac and NAB. Okay, so let's get to the best and worst performing companies today. And let's hope quite a few companies that I want to talk about are on this list. Starting with Appen, top stock of the day, a no-brainer, with a bullet. The return of Appen, people will be doing articles about that. Is this the inflection point or the turnaround for this particular company? Up 47.67% on the Appendix 4C, the first Appendix 4C the company has released. So is this the turnaround? That's the question moving forward. Whenever you see a rally like that on the back of a financial news or financial results, that can be a good sign moving forward. Other companies in this list that I could talk about: Otto Energy to release their Appendix 5B, up 20%, but on fairly low turnover. So whether I talk about that company remains to be decided. DXN could have made it into my top 5. Up 16.22% on the back of their Appendix 4C. I will talk about that company, but I am a shareholder, and I wanted to not be that biased by including in the top 5 stocks of the day. Reddit Corp had to include it in the top 5. They released their financial results, up 13.4%. We have seen a little bit of volatility in the share price of that company because when I first looked after the markets opened, Credit Corp's share price was down 5%. Now it's up 13.42%. Can you just imagine if you sold Credit Corp on open, down 5%, and then you see the share price rally 20% from when you sold? They're probably not feeling good. EZZ Life Sciences has now a nice bounce today. Expected that. I probably would expect also Findi to have had a nice bounce today because both of those companies fell a lot the last few days and probably well oversold. Might have a look at the chart for EZZ because I'm a little bit biased. If I've got time. Advanced Braking Technology, a small company, market cap 27.56 million, share price up 10.77% on the back of their Appendix 4C. And Titomic. So I do want to briefly discuss Advanced Braking Technology and Titomic later in the video. So let's move on. Let's have a look by market cap. Breville. Why is Breville up? Don't know. I don't remember Breville releasing anything. I'm a long-term shareholder of this company. Breville, nothing. just noise. Just noise. I might have a look at the chart for that company as well. Show my bias. Credit Corp, Superloops, nice day, but only up 4%. There's Findy. There he goes, up 7.94%. St. Barbara did release their something today, up 4.88%. Mac 7, oh, so close. Mac 7, oh, almost made it into my top 5 stocks of the day, up 10.2%. So I will have a quick look at Mac 7 later in the video. Now, there's one reason why, if it was another quarter, I think Mac 7 could have made it into the top 5, but I'll talk about why when I briefly discuss that company. And otherwise, that's it. So let's have a look at the losers, the worst performing companies today. Energy Resources down 32.9%. I have a feeling that company released their results or Appendix 4C at about midday. Let me just verify that via ComSec. ERA. Down 42.8%. Yeah, quarterly cash flow report at 12:50 p.m. So I have not had a look at that. They had response to media speculation yesterday. Not sure what that is. But for some reason, share price of Energy Resources is down a lot today. And otherwise, Syntara have done a capital raising. Nothing else, really. Or Medical Developments have just done a capital raising. Nothing really standing out there. So let's have a look by market cap. I assume Fortescue is at the top. Yep, Fortescue is at the top. Brainchip, Latin Resources, Frontier Energy, Airtasker did release their Appendix 4C. I did want to briefly discuss that company. Share price down 9%, and I can fully understand why. SciDev, nice little pullback, but that's understandable. Share price has been on a run since they released their absolutely stellar quarterly results. And that's it. That's it. Okay, so let's get into the top 5 stocks of the day. Starting at number 5. And this company, coming in number 5, has been a bit of a market darling in the last month. Quickstep Holding. Share price down 9.1%. And to be honest with you, their Appendix 4C wasn't that much of a surprise. I've been following this company for years and years and years. And every single time I open up their quarterly report, I am disappointed. Or every single time I open up their half year or year report, I am usually disappointed. And I'm just still waiting for this company to hit, find some scale, hit inflection point, because they could have promise. So let's open up. In fact, actually, let's have a look at the chart first, because the whole reason I've decided to include this company in top 5 is just because the share price, or is because the share price has rallied in the past month. If the share price had done nothing, I would have completely ignored this Appendix 4C, and you'll understand why in a second. But the share price of Quickstep has just gone bananas in the last month. In fact, the share price has gone from 15 cents to a high of 45 cents in probably just over a month, like a 3-bagger in a fairly short period, or 2-bagger. 1-bagger, yeah, 2-bagger in a fairly short period of time. Even today, share price went down as low as 35 cents, and we have seen a bit of buying coming in. So even though there wasn't anything that amazing about the Appendix 4C, so let's have a look. So, of course, the first thing I always go to is the cash flow statement. So receipts for this company always high. 22.5 million for the quarter, 106 million for the year, but barely operating cash flow positive for the year, but negative for the quarter. So that's the main reason this company just continually disappoint me. They don't have any scale, and they exist on very low margins. There's some of the things they do, including are in the aerospace area. So I thought maybe sounds exciting, and maybe there might be better margins in that. So they call themselves the largest independent aerospace composite business in Australia. And you just think of that, aerospace composite business. Probably assume that could have good margins, but this company has really low margins. You can just see that by the cash flow statement. Pretty good receipts and revenue, but almost no cash flow at all. Very little operating cash flow. In fact, I'm just looking at this now. Operating cash flow of 2.2 million for the year, and 1.2 million of that was government grants and tax incentives. So this company exists on very low margins. That's why I've been following this company for well over 10 years, and the share price during that 10-year period has just gone backwards. So let's have a look at the weekly chart for Quickstep. Yep, it's just gone backwards, 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 and I think that's one of the reasons why. This company sounds interesting, but they just can't do it. They just can't take that one extra step of generating cash flow and profits on a continual basis. So that's Quickstep. Coming in number 5, a bit of a disappointment. Well, maybe not a big disappointment, but to be honest with you, not much of a surprise when I had a look at it. But you can see the weekly chart. It's been a nice rally, some really good volume, but this company has had nice rallies in the past that just fizzled out. Maybe not on the back of the really good volume we have seen. So that's the one thing I can take that I would take positive away from looking at this chart is just the volume, really good volume coming in. So that's Quickstep coming in at number 5. Coming in number 4, Company IO. Hopefully the share price is up. Yeah, it's up a little bit, only up 2.44%. Now, Metarock, this is another company that exists on really low margins, and you'll be able to see that really low margin, probably even lower margins than at Quickstep, but at least this company has pretty big revenues and receipts. So you'll be able to see that when we look at the Appendix 4C. They did sell off a business, and that did significantly improve the cash position. So just for this particular quarter, $117 million in receipts, operating cash flow positive $3.5 million. For the year, $502 million of receipts, and operating cash flow positive $9.7 million. So really low margins in this business, but there has been a turnaround, a significant turnaround. Not only that, cash on hand has significantly shifted from being highly in debt. So the company was highly in debt not that long ago. Then they sold that business. Now they're in cash, net cash. In fact, they mentioned it in the highlight section. If I can find it here, net cash, 21.7 million, an improvement of 65.1 million because they sold that business. Sold that business. Pie bar. Anyway, so a few interesting things about Metarock that I really find intriguing. There's no way I'm going to sell shares in this company at all. No way. So these are the intriguing things about this company. And this really showcases my founding in investment, my beginning in investments. I was a value investor. I loved buying companies that I thought were really good value. And this is one of those companies. I don't think this company is high quality at all, but I see value there. And if the market discovers or realizes the value in this company, the share price of this company could go on a significant run. So the market cap of Metarock right now is 64 million. Don't forget, they have $22 million of net cash. Not only that, the company is operating cash flow and free cash flow positive, and not by a small amount either. Let's go back to the quarter. They were operating cash flow positive by 3.5 million and free cash flow positive by 3.1 million. They actually did make an acquisition, which cost 3.9 million, but a really good quarter. Free cash flow positive, $3.1 million for the quarter and $5.5 million for the year. So this is a company with enterprise value of, what was it, $40 million or something like that. And again, don't have to look at the cash. Debt is really low now. So this company is trading on a fairly low valuation multiple, really low. I haven't worked out the numbers just yet, but it is low. In fact, they're forecasting EBITDA to be around $50 million, which means this company is trading on less than 1 times 1, if you look at enterprise value, less than 1 EBITDA, which is screaming cheap. It could be cheap for a reason. Anyway, share price looked like it was breaking out, so I bought some shares at 21 cents, and the share price right now was it 21 cents? So if you go back to the daily chart, share price looked like it was breaking out, which is why I bought. The share price has just been dripping lower, very slowly lower. So I'm just waiting for the share price to turn a little bit more positive. But there is no way I'm going to sell this company because I just think it's cheap. It's just cheap. And yeah, it's probably got a really, really healthy balance sheet because it's got net cash, no or very little debt. So yeah. Anyway, definitely not for everyone, but I think you have to stomach these sort of companies. And the reason I say that is because I would not even categorize Metarock even in the same universe as high quality company. It's not high quality. It exists on really low margins, and companies that exist on really low margins have not much leeway. If something slightly goes bad, that can destroy the business for a year. Not the whole business forever, but just for a year. You could see the profit of a company go from nice profits to a loss, and cash flow go from nice cash flow to no cash flow just because of one slight hiccup. Okay, so that's coming in number 4. We have Metarock. Coming in number 3, we have to talk about Fortescue, don't we? Fortescue, share price down almost 10%. Unheard of. No announcements today. So what's happened with Fortescue? I think I've already sort of hinted at it. And the key to this, to understand what's happened with Fortescue today, is if you go to the course of sales and look at the trading today and go all the way to the beginning. Funny enough, if you go to the beginning at about 7:05 a.m., there were quite a few trades in Fortescue. I don't know what all these conditions are. EP, I've never seen that before. And some of these trades were as high as, is it options? I have no idea. It wouldn't be options. $29.50. And then we saw a few other trades at 7:42 and 7:44. And then at 8:30 a.m., almost right smack dab at that time, because it's 8:30 a.m. and 1 second, there was a trade of 100 million shares valued at 1.855 billion. And the share price of this particular block trade was $18.55. Look where the share price is now. So you can understand why the share price has dropped a lot, because someone thought, selling Fortescue shares at $18.55 is a good thing. Yeah, the share price is not going to fall to that level. They don't care because they're selling out. And whoever bought at $18.55 is now going, share price is now lower than when I bought. Anyway, so that's why the share price is down for Fortescue. It has just dropped like a rock. Anyway, so that's Fortescue. Drops a lot. And do we have to? Oh yeah, let's look at the chart. Oh, by the way, there's no announcements last time I looked, so I don't know who sold. I could have actually Googled it. I should have Googled it. So let's have a look at the chart for Fortescue. And the whole reason this company's made it into the top 5, Fortescue down 10%. What is going on when they've released no announcement? Anyway, so this is the chart. And this chart is screaming, stay away. There is without doubt, there will be some investors now thinking, there's value in Fortescue at these prices. And that actually could be true. There could be really good value in this company at current prices. I haven't had a look. Share price has dropped from $30 to $18.50 in 2024. Yes, share price got to a high towards the end of January, start of February at $30. So the share price of this company has dropped a lot. So there could be value in Fortescue. I should have a look at this. I'm going to have a look. Is there value in Fortescue at these prices? I do remember share price dropping to about $14 a few years ago, and I was thinking, was it here? Yeah, about here, October 2022. And I was thinking at that point, or maybe it was here, October 2021. Share price went to a low in October 2021, a low in October 2022, and we're moving towards a low. Maybe just wait a few months, you could get a little bit lower. And both of those lows were about $14 to $15. Anyway, so I do remember looking at this company. It was either October 2021 or October 2022 and thinking, this company actually does look attractive at these levels. And I don't see why it wouldn't at $18. Anyway, so that's Fortescue coming in at number 3 on the top stocks of the day. Coming number 2, I have to put Credit Corp at number 2, up 13.95% on the back of their financial results. Always the second company to release their financial results. That's not technically true. It's usually Corvest and then Credit Corp. I talked about Corvest yesterday, and in fact, how's the share price doing? It's up. Not surprising. I did have. Yeah, they released their results last Friday, and they did talk about data centers. And I straight away, as soon as I saw them mention data centers, I went, this could be a nice little buy. It is illiquidly traded, but I would like to buy this company below $1. Got to $9.95 today. That's stupid. That's crap. I know. I'm going on a tangent. Credit Corp, debt. They buy debt, and then they are debt collectors, I suppose. That's the best way to say it. Share price up 30.75%. If you had a look at the Appendix 4E, 2 pages long, open up no, I have not had a look at the presentation. I'm not going to open up the annual report. If you just had a look at their Appendix 4E, just the one statement, the one announcement, you might think, wow, what a horrible year. So revenue up 0.6%, so not much growth there. Profit down 44.4%. And I have a feeling the reason why the share price opened down about 5% is because people just saw a significant drop in profit. Now, in saying all that, they did release some financial year 25 guidance. And this could have helped. So the record that this is very important because anytime a company releases results or has an AGM, always look for guidance or outlook statements because what drives the share price is how the company performed compared to expectations and or any sort of guidance the company gives. And look at the language in the commentary. So straight away, without even looking at this, I can see there's a bit of positive language in this. The record-starting consumer lending loan book, US operational improvement, and a stabilized Australia-New Zealand debt-buying business should produce profit of between 90 and 100 million. So profit this year, remember, was 50 million. So they expect profit to double or exceed last year's profit and earnings per share of $1.32, which means the P/E ratio of this company is not that high. Yeah, it's like about 12 or 13, something like that. Anyway, I'm assuming that one of the reasons why the share price has rallied is because the outlook and guidance. It actually does sound pretty positive. Yeah, it sounds positive. And that's what I'm expecting right now. In fact, I have not looked at the rest of the financial statements. For me, it's just about the outlook and guidance for most companies because for companies like this, I don't think the expectation or the results would have markedly be different from expectations. I would assume this company has quite a few analysis, and when there's more and more analysis following a company, the expectations usually aren't that different from the results. That can be not true in all instances, but I would assume the positiveness in Credit Corp is because of the outlook and guidance. So let's have a look at the chart. And that probably also explains why the share price dove on open, because it was just panicking. They saw the profit down by, what was it, 44%. And went, oh my God, I've got to sell this company. The profit down 44%. This is a 1 minute chart. Massive volatility in the first 5 minutes of trading. In fact, the share price opened up a few percent. And in the first 5 or 10 minutes of trading, share price went from being up a fair few percent to being down about 5%. I did have a look and the share price in the first 5 minutes of trading, and I did see the share price down 5% at one point. I went, whoa, what's happening here? Well, I didn't say what's happening. I thought, oh, the market doesn't like the financial results, and then the share price recovered really quickly. So again, anyone who sold at 14.40 is probably kicking themselves right now because they've lost a lot of money by panicking. And yeah, nice 1 minute chart, just a gradual increase in share price during the day, which is telling me that the market likes it. The market really likes these results. Is this a breakout? Exactly what I'm looking for? It could be. This is a potential breakout for Credit Corp. And I don't think this company is that expensive. Not my favorite type of company, I will give you that. But this is definitely a potential breakout for Credit Corp. And it's a really good one-day candlestick as well. So according to this, it has a market cap of a P ratio of 22. Now, this means the P ratio of the company on these profits, so $44 million of profit. No, what was it? It was a 50 million. So this company is, again, it's P ratio of over 20. But if they do have a profit of, say, $100 million next year, this company will have a market cap of, not a market cap, a P ratio of just above 10. So look at the forward-looking PE ratio, not the backwards-looking PE ratio. This company does look cheap. So congratulations to Credit Corp shareholders. Maybe not as much congratulations as for Appen shareholders, particularly Appen shareholders who bought a lot of shares lately, because the share price of this company is now up 57% from 43 cents to 67.5 cents. And the share price just keeps on climbing. So a lot of interest in Appen today. They released their very first Appendix 4C. I was a little bit surprised by it. Now, what do I mean by that? If you go to April, they released no Appendix 4C. Go to January, no pennies for C. Go through their whole history, well, over the last 6 or 7 years, no pennies for Cs. So obviously the market or the ASX has asked Appen to release quarterly reports. So let's have a look at this. So again, when I open up these announcements, the first thing I do is I go straight to cash flows from operations. Okay, receipts, 53.2 million. For the year to date, 123 million. So a lot of receipts, a lot of revenue. Company is operating cash flow positive by 2.6 million. Sounds okay. 11.4 million for the year to date. So a little bit less operating cash flow in this quarter than the last quarter. Now, hang on. Capital expenditure, 528,000. Intellectual property, 2.7 million. So that's capitalized research and development. So the company was free cash flow negative for the quarter, positive for the year, however. So I was going through this and was going, oh, yeah, whatever. Not that interested. Cash in hand dropped by 2 million. Yeah, so, yeah, whatever. But if you go to the commentary, I could definitely see a little bit of positive vibes within the commentary here. Now, that could be just the management's getting a little bit, they're getting a little bit nervous and they just had to vibe up the announcement. That's definitely a possibility. But there were some interesting things in here mentioned, stated. So for instance, significant revenue growth excluding Google with positive month-on-month trajectory. Now, you might say, well, you're going to see all positiveness in these sort of announcements. That's not true. Sometimes you will see some quite negative commentary because things are not moving in the right direction, and they sometimes need to be frank with their shareholders and with the market. So anyway, so some positive vibes within the commentary here. EBITDA improving, target remains for cash EBITDA positivity in early second half. Cash balance remains healthy. It has dropped. Anyway, that's all I went through. So maybe there's something else in here. I don't think there was any sort of outlook. No outlook from what I can see. But the market likes it. And who am I to disagree with the market? The market is always right. Well, it's not. That's not a truth. It can be right a lot. Okay, so is this a breakout? So Credit Corp, I think, could be a breakout. I definitely think that's an argument for a breakout. So what I'm looking for here is a positive financial announcement. Tick. The market likes it. In fact, the one-day candlestick is really positive. Tick. So I don't usually say that. Huge volume. Tick. Sort of equal volume to what we saw back in March when the share price was on this nice little run. Is the share price at least a 6-month high? Last time the share price was at 68 cents. 68 cents was back in April. So that's only 3 months ago. So we're at a 3-month high for Appen. So wouldn't necessarily call this a breakout just yet. There probably is a little bit of resistance. All these shareholders who bought at high prices, some traders maybe even have maintained a holding in this company. But if we don't see significant selling in the next few days, this could be the start of a shift in sentiment and a shift in the trend of Appen's share price. Now, Appen is not that expensive. Market cap of about 100 million, I assuming. Let's have a look. Well, it's going to be maybe 140 million now, 150 million, yeah, because the share price has gone up 50%. So that makes sense. So it was 100 million, now it's 150 million, share price up 59.3%. But I wouldn't be surprised to see a lot of volatility in Appen's share price moving forward. If we don't see a sell-off, again, I think things are looking more interesting for Appen, the top stock of the day, their very first Appendix 4C. They've released. Okay, so let's have a quick look at a few other companies that did not make it into my top 5. Some of these companies did not release Appendix 4Cs. Technology One, I did want to speak about this. They had an investor day and they announced their goals for financial year 2030. So TAM of 13.5 billion and $1 billion of annual recurring revenue. 180-page document. I am not going to open that. Sorry, Technology One. I think you needed a smaller document, maybe a media release, and then this largest document. 180 pages, and the market's been whatever. And to be honest with you, if someone said this is the highest quality company on the ASX, I would not fight back. I would say, interesting. And the chart looks pretty nice. Value matters though. And I think the P ratio of this company is like 59 or maybe 60, 58.4. Valuation matters, but the chart looks pretty good. And this is a breakout. 22nd of May, share price rose on pretty good volume. Look at that, perfect breakout. Study breakouts like this. And I am a shareholder of this company, by the way. So, and I was thinking at that point in time, that this is a breakout and I should trade it, but I was just going back to valuation. It's just so overvalued. If it was undervalued, I would have traded this like nothing else. Talking about full-year results, Freelancer, forgot this company existed, released their half-year results, not full-year results today, and this company is just not growing. I had a look at their results, their numbers over the past few years, and then I looked at these results, and this company's just not growing. Let's have a look at the revenue. It's just not growing. This is revenue. It hasn't been growing for like 8 years. 2016, 52.8 million, 53.3 million. It's just not growing. It's not profitable. I just have no interest in this company. Zero interest, but I thought I should mention them. I mention this company once every 5 years or so, and then have a look at the weekly chart for Freelancer. At one point in time when they just listed, they listed in 2013. Wow. I didn't realize it was that long ago, but it makes sense. The share price when they listed, the week they listed, was the share price high for this company, and a fair bit of volatility in this, but overall share price has decreased through time. So this, in a way, has been a disastrous IPO. For those who bought in the IPO are not enjoying things right now for Freelancer, and that will be the last time. This will be the last time I mention Freelancer unless they change things up. Let's talk about Star Entertainment Group. So I go through my processes at the end of every day. Usually that's about 5 p.m., 5 to 6 p.m. Yesterday I did 10:30 p.m. So always after I record these videos. And Star Entertainment Group popped up like crazy. It was like, whoa, what's happening with Star Entertainment Group? Share price yesterday rallied 14.7%. I was like, oh, is something interesting happening with Star Entertainment Group? Is this a breakout? Share price down slightly today. It's not negative, but they did receive a price query from the ASX, which is understandable. And apparently, according to the management, there are rumors of what do they call it? Corporate activity. So media articles speculating on potential corporate activity. Not the sort of thing I would, or not the sort of reason I would buy shares in a company. But you can't ignore what happened yesterday. I was hoping the share price wouldn't fall back all that much today. Share price has been going sideways for a while, and one nice little day does not make the end of the downtrend or the consolidation period, but it is looking better. Yesterday, share price got to fairly long high, so this could be not massive volume, and it's not on the back of a positive financial information or results or whatever. So very close to being breakout for Star Entertainment Group. And I can definitely see why 2 people left comments in my videos because of what happened with Star Entertainment Group. In fact, I think someone said I missed it. Well, didn't necessarily miss it. I just didn't see it when I was recording the video. Now, so yeah, I was actually thinking of buying some shares in this company this morning before I saw the response to the ASX price query, and then I held back just because it's not the sort of callous that would lead me to buying some trading or some shares in a trade. Okay, IGO. This is another interesting one. This is one where I initially saw the price, and share price had opened up higher when they released their quarterly results today. And I don't think they were all that bad. I won't open it up, but they weren't that bad. I thought that was pretty good. And then I saw the share price was up about 3 or 4%. And then I had a look a little bit later, and the share price was down at 6%. So the share price in IGO has been quite volatile today. But overall, if you look at the chart for IGO, so they mine lithium. Do they mine anything else? Definitely lithium. If you have a look at the chart for IGO, not there yet. Downtrend. Negative sentiment, downtrend, not there yet. In fact, probably not there yet for a while. And if you look at the 1 minute chart, you're going to see a little bit of volatility, particularly on Open. Share price rallied on Open quite a fair bit. Went to $5.88, And then the selling began in earnest, well, just after that, but really in earnest at about 10:50 a.m. And then the share price dropped all the way down to $5.31. So the share price dropped 10% from the highs. And in the last few hours, last hour, we have seen the share price starting to move higher on some good volume coming in. So that's IGO, their quarterly results. EVZ, company that could have made it into my top 5. Share price has done nothing. They released earnings guidance. I don't know a lot about this company. I have a feeling they're mining services. Let's have a look. Leading Australian innovative provider of technical services in the energy and resources and building product sectors. Energy mining infrastructure. So they released their results. It looks good. Nice growth in revenue. Well, maybe not nice. So revenue climbing from $111 million to, we'll say $120 million, so about 10% increase in revenue. And EBITDA going from $3.7 million to roughly, we'll say $5 million. So nice growth in EBITDA, but it's EBITDA. I prefer profit. I would assume this company has a fair bit of depreciation, amortization, or definitely depreciation, maybe not amortization, maybe some interest in there as well. And the profits are going to be fairly low. Company has a really low market cap. Really low market cap. So we're talking about 20 million, 18.8 million. So there could be an argument this company is cheap. Let's just have a quick look at the financial history of this company. Quick look, I said FinChat. That means do it quickly. I don't have the patience. Revenue has been lumpy, but generally over time, revenue has been increasing. What about profit? I'd say some years profitable, some years not. We'll get rid of the revenue. Some years profitable, some years not. But over the past 8 years, they've been profitable, most of them. Only 1 year they were not profitable, and that was in 2020. But profits not going anywhere, flat at best. Anyway, so not a highest quality company, but is this a sign? Could this be sort of the new growth trajectory for the business? I don't know. And have a look at the chart. Well, that's the 1 minute chart. We'll have a look at the weekly chart first. Nothing much happening here, I can tell you that much. And I think in the daily chart, nothing much happening. Yeah, no interest based off the chart, no interest. Okay, let's have a quick look at some Appendix 4Cs. Dubber, with a quick look, down a bit, and this company has been is notoriously for burning through cash like cash can be just found on a tree. And I thought, oh, let's see if it's changed. And it hasn't. That's the first takeaway I got from this particular Appendix 4C. It hasn't. Still burning through mountains of cash. So receipts of 10.9 million, but operating cash flow negative $8.6 million. Have a look at receipts of customers and product manufacturing and operating costs. There's not much margins there, is there at all? So no way, Jose, for me. Move on to the next one. And for those interested, Dubber chart is horrendous. Horrendous. Yeah, I'm not sure why you would even think. Maybe market cap is low. Maybe that's why. But even then, yeah, no interest. But just because I have no interest doesn't mean you don't have to. Alcidion. How is Alcidion's share price? Let's have a look. Oh, it's down. Oh, it's interesting. Share price opened up about 7%, 8.3 cents. Now, on the surface, if you don't know much about Alcidion, you would have, and don't forget this, someone complained about me being too negative on this company. So just spouting the truth. I'm just seeing it I'm speaking how I see it. I'm not going to lie or spin something. Spin something negative that positive. That's ridiculous. Anyway, so I do know Alcidion a little bit. I am an ex-shareholder. And I sold because I just didn't think the management were performing. And I was disappointed with their performance. So let's have a look at this particular, the surface numbers. On the surface numbers look really good. So receipts of customers, 18.6 million for the quarter. And operating cash flow positive, 5.6 million. So you might think, wow, they've turned it around. Just forget year-to-date numbers. So just forget that. So you might think, wow, what an absolutely great quarter for Alcidion. Okay, so let's go back in time. Let's go back 1 year ago and look at their June quarter results for 2023. And this is very important. Okay, let's just compare the two. In fact, if we're going to compare the two, I'm going to put in two side by side. Here we go. Oops, I've got to zoom in on this. Maybe one, a little bit more. Side by side. Oh, no, one less. Was it 200%? 150. Side by side. So maybe I've got it wrong. Last year's is on right here. And last year they had receipts and customers of 17.6 million and were operating cash flow positive by 6 million. So a little bit more operating cash flow positive last year. This company's receipts are seasonal. Their best quarter in terms of receipts are the June quarter. That's a given. In fact, they sort of hinted at that in this. I'll just get rid of this now. They hinted at that very fact in this particular little graph. Quarter 1, quarter 2, quarter 3, massive jump in receipts in quarter 4, particularly the last few years. So there is a bit of seasonality. So don't get caught up in the quarter 4 numbers. And I think that's what happened on Open this morning, because the share price did open at 8.3 cents. And I do think a few people knew that. And that's why the share price hasn't gone on a rally today. That's Alcidion. So don't be fooled by companies that do have good quarters. There could be seasonality in there. That's why I like to compare the previous corresponding periods results to the current results, because that it cancels out seasonality. Don't look at the previous period. Don't look at the March quarter and then compare this quarter to that quarter, because then you come away and go, wow, this company is growing. Have a look at all quarters. Maybe not all quarters, but yeah, just don't look at one quarter and compare it to the previous quarter. That's the lesson when it comes to Alcidion. Titomic, quickly go through this one. Share price was up. So I actually do own some shares, a very small portion of shares in this company. Sort of like a token position, because I do like what their potential, but I don't have the conviction around this company just yet. So just a token position, not really a trading position. Anyway, they released their cash flow report and nothing really to see just there. So receipts, 1 point something million, 1.4 million, operating cash flow negative, but it's just the activity report, which did, and I think this is the reason why the share price has rallied today, or gone up a little bit. Also because the share price had fallen the last few days as well. They do mention here in the highlights section, the last part, material cash receipts forecast for the first quarter 2025, which is their next quarter, including 2.1 million from OMIC, Sabanci University, and the Royal Netherlands Army. So their next quarter results should be quite good, possibly operating cash flow, free cash flow positive, just possible at this point. But definitely a company to put on your radar. But again, valuation matters. This company has a pretty high valuation. Last time I looked, it was like, ComSec says 146.6 million. I thought it was like over 200 million. So let's have a look at market index. 151. No, they're right. Okay. I thought it was like 200 million. So a little bit lower, but still fairly high market cap for a company that really hasn't proven anything just yet. And that's why I just don't have the conviction right now for Titomic. Okay, Airtasker, share price down a fair bit today on the back of their Appendix 4C. And the first thing I just want to know or note about this company, their receipts aren't growing, dead flat. And I've been tracking the receipts for this company for many years, and I just didn't see any growth in receipts. Have not seen growth in receipts for this company for a while. They do mention a fair bit of there's group revenue growing in the last 4 years. I don't see that in receipts. And the company receipts customers 12 million. You can actually see that in the year to date. So this quarter, 12.2 million, for the year, 49 million. So they keep getting $12 million receipts quarter after quarter. So not much growth. Now, I don't mind if there's lumpiness there, but very little growth. And the company is or was operating cash flow negative for this quarter. They were positive for the year, but negative for this particular quarter. And I think the market was a little bit disappointed by their results. Hence, the share price is down. I could go through and have a look at my what do you call it? My spreadsheet, and you'll be able to see their receipts. But if I put Art here, it just goes through everything. Art, because I have quarter here, and there's ART in quarter, so I have no idea where Airtasker is in this. I should actually put, instead of the T code, I should put the company, because I do this every single quarter. When as soon as I put ART in the find-in document, it just takes forever to find it. But trust me, receipts aren't growing all that much. Maybe slowly, but not all that quickly. Okay, so that's Airtasker. Zip released their Appendix 4C. So just briefly mention that. Yeah, nothing to see. Operating cash flow positive by a fair bit, but we probably expected that. And so things are still moving in the right direction for this company. So operating cash flow positive by 65.2 million, 269 million for the year. But there's more about this business than just operating cash flow. But probably the most important thing about Zip right now is a positive sentiment in the company. You can just see that by the chart. See that by the chart, the sentiment started to shift late last year, and still a nice looking chart for Zip. So let's move on to the next one. Let's move on to a company that I have never really looked all that closely. Advanced Braking Technology. Share price up 10.8. And this company has been operating cash flow and free cash flow positive for quite a few quarters in a row. And so I'm thinking maybe I should do a little bit more research on this company, because they are growing slowly, but there's growth there. And the market cap of the company is not that high, 27.6 million. So closing cash of 2.4 million. Profit for the year, 1.7 million. And if you go to, here's their normalized revenue from ordinary activities. Nice slow growth. And another good quarter for Advanced Braking Technology. They weren't operating cash flow positive this quarter, but yeah, very solid quarter for the company. I thought they were operating cash flow positive. Got it wrong. Okay. For some reason, I thought they were. But for some reason, the market likes it. That's probably why I thought they were, because the market liked it. Otto Energy, up 20%. Fairly low turnover, though. 2.9 million shares traded. I don't know much about this company, except they're probably oil producing. But I had just had a quick look. They said, I just saw that they're debt-free. Cash balance at end of quarter, 40.5 million. Okay. So what's the market cap of this company? That's going to be interesting, because they were operating cash flow positive. So oil, they're talking about oil here, gas, NGL, okay. They have about 5 billion shares on issue. That is a little bit of concern, but here it is. So receipts not that high, 4.6 million, but they were operating cash flow positive by 2 million for the quarter and 13.4 million for the year. However, that includes insurance proceeds, which was 7.6 million. So you take that away, they were still operating cash flow positive by about $6 million, and they do receive quite a few interest from their cash. So what is the market cap of this company? OEL. Otto Energy, 57.5 million. So remember, they have a fair bit of cash. So this company is trading on, if you look at the enterprise value, 17 million. So now let's have a look at the chart. So intriguing. Otto Energy, is the chart intriguing? No. Share price has been in a downtrend for a while. In fact, the share price has almost halved since October last year. Let's have a look at the weekly chart. Yes, I'm not the biggest fan of this particular chart at all, and I believe the company should do a share consolidation. Get the shares down from 5 billion to 470 million. I think it was 4.76 billion. So they could easily do that. And if they do that, the share price would be 12 cents, not 1.2 cents. Okay, so that's Otto Energy. Let's have a look at ERA. Share price was down a lot. 42. I don't know anything about this company. Quarterly cash flow report. What I'll do is, so no money, $11,000. Payments for rehabilitation, 42.9. Eek. How much cash do they have? 127.98 million. So obviously this is a company who wound down their mining operations and now spending a lot of money for rehabilitation. Okay, so there's no really any reason to look at this company right now. I don't know anything about it, but the market doesn't like something, obviously, down 42.86%. Let's have a look at the chart. I suspect this chart is pretty ugly. Yep, that's the weekly chart. Not much happening there. In fact, the share price right now at 2 cents is probably an all-time low. Yep. Okay, so let's move on. Why am I looking at that? Let's go to M7T, Mach 7 Technologies. Share price up 9.32%. And I have to admit, I actually did like this particular Appendix 4C from the company. Now, this company has a valuation, market cap, I'm thinking maybe 150 to 200 million. Ooh, 156.81 million. So there is a bit of, I wouldn't say blue sky attached to the valuation of the company right now, but I suppose if the company had a market cap of 15 million, I'd probably be a shower right now. But pretty good quarter from the company, another good quarter from the company, and a pretty good year from the company, if I remember correctly. Yep, so $10.5 million in receipts, operating cash flow positive by $2 million for the quarter, $3.2 million for the year. So the quarter was probably the best quarter of the year. Now, receipts to customers, $10.5 million. Now, if I remember correctly, there is a bit of seasonality for this company, just like Alcidion. And if I remember correctly, and do they have a graph like Alcidion? Not quite. No, not quite. So I can go to my spreadsheet. Not sure why I'm going to be doing this. M7T. Whoops. M7T. And just by looking at the numbers, this little document here is from last quarter, April. And in fact, if you look at this, there's definitely spikes in receipts. June 2020, April 2021. There's not necessarily seasonality here, but the last 3 June quarters have been pretty good. And overall, receipts are growing. A lot of lumpiness there. There is signs, possible signs that lumpiness has been or is being flattened out because we haven't seen any significant drop in receipts like we saw back in September quarter 2022. So maybe I'm being a little bit unfair on Mach 7 in saying there might be seasonality there or here, but a pretty good quarter from the company, and the share price is up, so the market likes it. Now let's have a look at the chart. I have a feeling the share price is going sideways. Yeah, share price is going sideways. This is the weekly chart. In fact, the share price has been going sideways for about 2 years. So no trend. Ooh. For some reason, the market didn't like this company leading into these results because the share price has taken off. But yeah, nothing in this particular chart that makes me interested just yet. Okay, so finally, DXN. We'll have a quick look at the 2 charts. So DXN Limited, this is a modular data center company. Share price up 18.92%. I don't know why the market is reacting to this because I think it was a no-brainer. This company was going to have a really good quarter. And when I say good quarter, I mean operating cash flow positive. They hinted at it not that long ago. Expecting EBITDA positive, underlying EBITDA positive, cash at bank of $3 million, operating cash flow positive, that sort of thing. And yeah, a good quarter. Receipts growing nicely, 4.9 million, operating cash flow positive by $1 million. So yeah, a good quarter for this company, and I expected it. And funny enough, yesterday there was a bit of a sell-off in this company. Let's have a look at the chart. And good growth in this company as well. And the market cap of this company is not that high. It's actually one of the reasons I'm owning or holding shares in this company is because it has a market cap of $16 million after the share price has risen 18%. I just think there is low downside, not much to the downside, and there's blue sky ahead. Particularly if they hit their performance out the park. What was it? Oh, the chart. So yeah, a weird sell-off yesterday. Share price fell. Was it 10? 12% yesterday and is up 18%. So share price is right back to where it started yesterday. So those who sold yesterday at like 7.4 cents are probably kicking themselves right now. And otherwise, the chart looks really good. Nice chart. Breakouts happening. Share price moving into an uptrend. And look at the volume. Really good volume coming in. And the reason there's really good volume is because the company is starting to perform financially. Okay, and I'm going to look at two charts. This video has gone on a little bit longer than an hour. I didn't want that. I wanted under an hour. So let's have a look at a few charts. EZZ and BRG, just for my own sake. And, EZZ, bit of volatility today. So has been a little bit of selling in the last part of today. Up 7. So a little bit of volatility, which is understandable because the share price had fallen. But I think the valuation of this company was getting to the point where I was thinking, maybe I should add to my position. I just noticed the one-day candlestick. It looks like they would have been selling on open this morning, and share price went to a low of almost $1.50. So let's have a look at the 5-minute chart. Oh yeah, that was selling on open. This could have been, you could argue this was capitulation this morning, and the share price has rebounded nicely, but on fairly low volume. That is a little bit of concern. You like to see volume growing as the share price bounces. But the other good thing about EZZ is look at the significant increase in volume. So I do think a lot of people selling now are just taking profits because really good share price appreciation since April. I'm pretty sure this would have been a 4-bagger. Almost a 5-bagger over a 3-4 month period. So you will see profit taking in those situations. Now, what's happening with Breville? It's going bananas today. Breville Group up. Well, it's not the best looking candlestick here. Chart looks okay. I probably wouldn't buy Breville right now based off valuation. For instance, the PE ratio is like 35.5. Sure, the company's going to grow, but I think there would be at some period during the next year, you could buy this at a better price if you really want to buy shares. But if you look at the weekly chart, beautiful chart. Going all the way back to 2009. Sort of chart you want to see if you're a long-term shareholder. And this is the chart of a high-quality company. Yes, I would consider Breville Group to be a high-quality company on the ASX. And this is the sort of chart you see for high-quality companies. Not, and I'm sorry to be picking on Telstra, this is the chart of a low-quality company. Telstra, the complete opposite. Well, it's not the complete opposite because, well, it sort of is. The share price has gone down over the past 25 years. This is the chart of a non-high quality company. And I have been asked or been questioned, why don't you consider Telstra Group to be high quality? They have a moat. They're high quality. They have a moat. I think that's in my comment section somewhere. Anyway, so that's all I have for today's video. Sorry, no comments. Would have liked to look at more charts, but we're just getting through a plethora of Appendix 4Cs. And I'm glad I was able to speak about most of those. A few other companies that did release stuff today that I didn't talk about. St. Barbara Dock Anywhere released Appendix 4C. Could have talked about that. Antio, Charma Corporation, Frontier Digital Ventures, another company called Imexis, IME, and released Appendix 4C, and IDT released some sort of trading update, and it was kind of positive. So completely skip those companies because this time of year, busy. A lot of announcements are being released. Anyway, have a good day. And don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.